What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This one took a beating during the pandemic, and there's a reason why, which I'll go over this monthly dividend stock. They announced a recent dividend hike, and they're coming back with a vengeance. So I'm going to do a stock analysis and dividend stock analysis with this company, and this is why I've been buying this like crazy during the pandemic. And this stock is coming back with a vengeance. So there is a dip there. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I love this monthly dividend stock, and I have emphasized this monthly dividend stock that it will come back with a vengeance, and it will come back fast. So let's check this out right now. And that stock is AGNC. I absolutely love that stock. Just kidding. And that stock is EPR Properties that I really want to emphasize. This is a real estate investment trust that took a huge hit during the pandemic. At its peak, it was right around 78.25, and it hit 18.05 at its lowest. And go figure, I'll explain to you guys why these guys took a huge dip. And this is why I bought the dip in these guys, because I knew they would start coming back. And they're slowly starting to come back. They're not to where they were in the 70s, but they have a dividend yield of 5.88%, a PE ratio of 56.36. Big deal. FFO is more important. Volume of 734.80K. Market cap is 4.04 billion US dollars. Year range is 41.14 to 56.29. Its day range is 54.21 to 56.29. And its previous close is 53.86. So let's go over these guys, and this is why I bought the dip. So EPR Properties is a leading diversified experiential real estate investment trust specializing in select enduring experiential properties in the real estate industry. So they have 200 plus tenants in 44 states in Canada, 353 locations, 6.4 billion in assets. So right here, they are focused on creating a diverse real estate portfolio that offers the potential for stable and attractive returns. Our real estate venues drive value by facilitating out-of-home, leisure, recreation, and social experiences. Right here, this should be an indicator why there's a dip. Places where consumers choose to spend their discretionary time and money make up the social infrastructure of society. So right here, okay, they are a big landlord for AMC theaters. They're a big landlord for the golf resorts, the simulators, pretty much, and for skiing resorts. So go figure. Again, as I always tell you guys, when you look at a real estate investment trust, study what they're about. So this is what they're looking at. It's a full 74% of Americans now prioritize experiences over product of things. Baby boomers are entering a stage where less is more, while younger generations, particularly millennials, are leading the charge in placing a newfound value of experiences more in things. Research has also shown that shared experiences with friends and family drive longer-term happiness, while happiness derived from material goods tends to decline after the purchase. So, social sharing. So let's check out their portfolio real quick. So we have theaters. Okay, AMC. They have attractions and resorts. They have ski resorts, experiential lodging. They have gaming resorts, fitness and wellness, eat and play. I'll just click this right here for you. So right here, they have 56 properties. Top Golf right here. So think about this. I have this highlighted for a reason, because if you think of Top Golf, what do you think is going on when the pandemic hit? Everything shut down. So you saw the huge dip with these guys. They have all these properties that are like really attractive. Like I said, the fitness and wellness, the theaters, the lodging, the ski resorts. Actually, EPR Properties, there's a ski resort. I'll go over their map real quick. There's one actually like literally right where I live. And it's very interesting, their portfolio and what they're focused on. And they have an extensive portfolio. Look at over here in Ohio. The Boston Mills is kind of like a ski resort over here. Here is Alpine Valley. That's another one. And Valley View. That's another. That's Cinemark right there. So just looking at theaters. So I'll just take everything out just to show you how well diversified. They do have private schools and early childhood education Let me just show you the theaters. They're pretty well diversified in theaters with their portfolio. There's a lot of theaters, and guess what? People are attending movies now. That's one thing that's attractive. We'll go to Eat and Play. So they're well diversified in that. Here's just some, here's a Top Golf. Right here is Top Golf Westchester. Here's just Top Golf in Pittsburgh. So you notice they're going after Top Golf. Here's attractions. Here's just an example. Darien Lake, H2OBX. Here is iFly Denver. And then here's the ski resorts. Here's the ones right by my backyard, right over here. I'll scroll that up. Mad River in Zanesville. There's Boston Mills. And there's Brandywine. So, and then there's the lodging right here. There's the hotel in Nashville, Camp Margaritaville. So these are popular places that people go to. There's gaming right here, resorts, Wild Catskills, cultural. Here is a Titanic Museum. They have museums. People attend museums. In fitness and wellness, they have health clubs right here. So it looks like they're all over. And here's a 24-hour fitness. The private schools, they have one, Montessori Academy of Cincinnati. So they have some private schools, but that's not really too exciting. Early childhood. Here's Prep Academy in Dublin, Ohio. But the biggest thing I like is their diversification. So go figure. Like I said again, they took a huge hit, and they're still taking a while to rebound. So I'll go over their revenue and their dividend history, which makes these guys a very attractive monthly dividend stock. Right here, 2014, it was 385. This is in millions US dollars. 2015, 421. 2016, 493. 2017, 518. 2018, 639. Then 2019, 651. So you're seeing a jump in 2014 and 2019. 2020, they were 414. So they took a huge hit during the pandemic. And, you know, just looking at their portfolio, looking at things shutting down, you know, how are they going to make money? So that's one thing that these guys, they took a huge hit, and they're actually rebounding pretty strong. And I'll go over a few more things. Look at this. In March, the revenue was 110.25 million. Then it was 124 in June when people started getting vaccinated. September, 139.19. So the revenue has gone way up. Net profit margin, everything, operating income right here, diluted EPS looks good. Then it went from 151.66, net income went up, diluted EPS right there. Net profit margin went up, operating income went up. So you're seeing an increase. They're making a comeback. You know, I'm going to say this again, these places closed and they're back open. So people are starting to go back to normal. We're starting to get into the endemic stage. I don't want to, you know, say anything medically, but the vaccine is out there, and hopefully, let's cross our fingers that we are at herd immunity right now. Let's jump to their dividend history. 2016, it hit 32 cents. 2017, it hit 34 cents. 2018, it hit 36 cents. Then 2019, it hit 37 cents. 2020, it hit 38 cents. And then the pandemic hit. So these guys pretty much suspended their dividend. I mean, how are you going to make money when nobody's attending anywhere? So they eventually, the board of directors said, all right, we're going to resume our dividend, monthly dividend. And look, we just got a dividend hike, which I will be receiving tomorrow at 27 cents. They have a dividend yield of 5.61, an annual dividend of $3.30. And forget about PE ratio. The revenue's jumping up. These guys are still not at $70, which is good. The dip is there. I'm just telling you guys, this monthly dividend, REIT, aka EPR Properties, is coming back with a vengeance. And this is one that you should check out, keep an eye on. I bought the dip. And again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. But this is the hottest real estate investment trust and probably the hottest monthly dividend stock out there right now. Now, I know everybody wants to emphasize QYLD, RYLD, and XYLD, but this dividend is growing. The dividend is going up. It has excellent dividend growth, and I see these guys coming back very strong with a vengeance and fast. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. I may make a video tomorrow. It's kind of a game day decision, but for sure Thursday and Friday I will. So you guys take care and have a good one.